Good morning and welcome to our regular Trade Next show. I'm joined now by Darren Sinden, market commentator for Admiral Markets. Welcome to the show.
Good morning, Craig.
So today we're going to be talking not so much what instruments you're trading and how you trade, but how you're trading them and how you're set up.
Yes, I think it's important. We're all of us market professionals, but I think sometimes it's very easy to forget that not everybody is an expert in finance, and obviously there'll be new people, thinking of taking up trading for a living or at least part time. So I thought today we could have a look at one of the cornerstones of your setup, if you will, if you're going down that road and considering doing that, or indeed if you're an established trader and things aren't perhaps panning out for you. And one of the reasons for that might be that you don't have a trading plan, and if you do, maybe you're not sticking to it. So I thought we'd have a look at what constitutes a trading plan, why it's important, and some of the things that you should consider within it. As ever with these slots, we've only got 10 minutes, and this is a subject we could wax on lyrically for hours about. But the first thing I wanted to point out really was that successful trading is not down to luck, and it's a combination of planning, systemisation, rule following, and intuition. And what I mean by that is, you shouldn't leave things to the spur of the moment. Trading on gut instinct for most people, I'd say 99.99% of people, doesn't work. You need to take a step back from the market, think about what you're going to be doing, and consider what your strategy is, what your rules for trading are, and try and combine those into a plan that will maximise your chance of success.
I had a friend a few years ago who he talked about. He opened a spread betting account, and he talked about playing with his spread betting account, and he treated it like a computer game. And then when it was game over, he'd restart and put some more cash in it, and that's the thing you need to avoid.
I think that would be the pattern for many novice traders, as we would call them. So I think some of the things that you need to consider when you're thinking about taking up trading, and are quite straightforward, but it's quite easy to overlook them. So, for instance, when will you trade? What time of day is going to suit you? How long are you going to be trading for? What period of the day? And when will you be able to give trading your full attention?
So is it worth just like you set down a set time each day or a set time each week where this is a time, rather than you're not doing it while you're watching TV, you don't have the radio, and you sit there and you're focused?
I would say, absolutely. And I would say even if you're not trading if you're just doing some background reading and research, it's best to devote as much time as you can where you can give that your full attention. I think that's the key. Of course, people have to fit trading in around their lifestyle perhaps. So how much time can you commit to trading per day, per week? Will you have perhaps an hour in the morning before you go to work? Will you have some time at lunchtime perhaps, where you can do that, or perhaps at the end of the day when your day job's finished, if you still have one. So you need to give serious consideration to that.
But within that, surely people got to think about when's the best time to be trading. Sometimes if you're thinking about trading at the end of the day, it's not the best time for market action, for liquidity, that kind of thing.
Not necessarily, but then maybe you'd have to think, if you were in the European time zone and you were committed, say 9 till 5, perhaps you'd then have to think about trading, say, a US market or another US market, because that gives you a potential 4-hour window of opportunity at the end of your working day. And allied to that, of course, is where will you trade from? Will you trade from home? Will you trade from work? Are you able to do that? Or if you're out and about, will you trade from a mobile device? And you need to consider all of those things, because they will all have a bearing on how you trade, and in the end, the efficiency or the profitability probably of your trading. So if we can move on to the second slide. So there's a whole suite of other things to consider, and we could probably have added 4 or 5 more slides in, but sort of following on from how and where you're going to trade, do you have the appropriate kit and connectivity? Everything's electronic these days. Some people will, perhaps phone a broker and trade in conjunction with them, but many people will be in charge of what we call pushing their own buttons.
But I mean, you see these pictures of people with 16 screens in front of them. They've got a Bloomberg terminal, they've got Icon terminals, everything like that. Obviously, you don't need that to start off trading, but what are the kind of basics that you need to have, really?
I think, I'd say 2 things. First of all, you need to have connectivity. If you are trading, you do need to have a reliable and confidential broadband connection, whether that's over a mobile device or whether it's hardwired into your home or office. But you need that, and it needs to be it doesn't need to be millisecond fast, but it needs to be pretty fast and have a very good uptime. And I think probably equally important to that is an environment in which you can concentrate free from distraction. So it might be at home and you might have two boisterous toddlers running around. Probably not going to be the best environment for you to be trading from. So you don't need to spend a fortune, but you do need reliable kit that was up to the task. Some people choose to go for a gaming computer, and if you're trading on a mobile basis, probably a decent tablet with a decent screen size is probably a good idea as well. So we talked about the environment in which you can concentrate. You need to also think about what markets are you interested in and what markets will you trade in. We live in an age where there's a multitude of choices of different markets, different products, different with the standard products, leverage things. You need to consider all of that before you make a decision. But perhaps the thing that will guide you the most is which of those markets do you understand? Are you familiar with? Do you understand the concepts of say, a leveraged product, or do you feel more comfortable trading equities, or do you understand foreign exchange?
Well, I suppose these two can't go together. You have somebody who's been trading dollar yen, nothing but that. Then suddenly WTI hits the headlines. You've had this big crash, and they think, I'm going to pile into that, and that's a risk.
Yes, absolutely. So generally, my advice will be don't trade what you don't understand, particularly when you're starting out, because each market is different, has its different nuances, and it's very easy to get sucked into a situation, particularly with leverage products, where you may not fully appreciate the risks involved, and that could cause a very unsavoury outcome at the end. I also think it's quite important to think about whether you prefer fundamental or technical analysis. That is, what's your approach to the market? What drives your decision making? Which style makes sense to you? And it's quite important to decide about that. I mean, I personally like a blend of both, but if you're going to be trying to scalp, i.e., trade frequently, but for small returns, probably not going to be someone who focuses on fundamental analysis. If you follow technical analysis, that would probably suit that style. If you're going to trade in what we might refer to as swing trading, momentum trading, then you possibly could take a fundamental analysis approach, or a technical analysis one. If you're more position orientated, so longer term, then probably you're more likely to be leaning towards the fundamental than the technical, though you may use technical as a support tool. So you need to decide what style makes sense to you and what trading style you'll use. Of course, the question about trading style will obviously be linked back directly to how much time you can commit to trading. If you're somebody who's just going to put on a series of limit orders at the beginning of the day or the week, and just wait for them to be executed, you're obviously not going to be in a position to be a scalper, but you could be swing trading or taking positional views. Probably one of the most important things, of course, to consider when trading is how much risk capital do you have? And I think any broker will tell you that any money you do commit to trading, and this is definitely a question of trading more than investing in this instance, it should be money that you can afford to lose. So it can't be something you're relying on in the future, or certainly it shouldn't be the mortgage payment. It should be a sum of money that you can cut. If you lose it, it will hurt, but it won't ruin you.
And of course, you need to remember, this is different to buying stocks and shares. You're leveraged, and you've got to understand, it's not just that kind of nominal value. It's the
exactly. So that comes back to the idea of of what markets do you understand, because you need to, if you are trading through leverage products, you need to understand what your total liability is, and what a move in that given instrument will mean to your risk capital. So you need to think about your tolerance for loss, and we could talk more and more about this. Perhaps we'll do that in another slide. Your attitude to risk and reward, I think that's very important. Particularly for new traders, you need to think about capital preservation. So you want to be,
to live to trade another day.
Very wary of risk. It's all, it's okay to look for good rewards, but you need to control your downside and think about scratching trades, i.e., cutting losing trades quickly for a small loss. You also need to give considerable thought to what your end goals are for trading. Are you looking to make a few £100s a week? Are you hoping to become a multi-millionaire overnight? If you've got the second view, you probably need to go back to the beginning of our discussion and start thinking again.
And of course, with all of this, it's once you've got a plan, you've got to stick to it.
That absolutely isn't. You know, in the end, you'll probably end up with a sheet with 10 or a dozen rules, and it's great writing them down. But if you don't stick to them, then you're not doing yourself any favours at all.
Well, Darren Sinden, market commentator for Admiral Markets, thank you very much, and don't go anywhere.